Well, hello everyone and welcome to the Real World Blockchain. I am Gauthier, Lamothe, your host, and today my guest is Benoît Boudier, a fellow French compatriot, and Benoît is the Business Development and Partnerships Director of the Europe Zone for Börse Stuttgart Digital, and he's also been working as the Director of Partnerships at Stablemint and also at the very prestigious Circle company. So you can imagine he's got a lot to say about payment solutions. Hi, Benoît. How are you?
Hello, Gauthier. Hello. Very well. Thank you. Very happy to be here. Thank you for the invitation.
All right. So for the listeners who do not know who you are, can you please tell us what's your background, how you came into the cryptocurrency space, what you liked in it, and yes, what you do these days?
Sure. Absolutely. Well, I came in the space like a bit more than 5 years ago. One of the reasons that really pushed me to get involved in the crypto is I kind of see fairly early on the revelation it was bringing to the financial world. I had some experience in TradeFi via Bloomberg and other exposures in the past. And when I saw the DeFi coming up during the DeFi summer back then, all this great technology, I could definitely see very quickly what gaps it was going to fill into the efficiency of the financial system as it is today. And so I came in contact with this company called Saibabo, who was a Taiwanese-based MVC wallet provider. At the time, was looking to expand to Europe. I joined this company and my great friend now, Roberto Machado, who is still with Circle nowadays, and helping him to build the brand of Saibabo in Europe, build the partnerships. And as we were very successful 1 year on, 1.5 years on, got acquired by Circle, who was pushing in the wallet space. And that's a bit how I got then into the Circle world, pushing the stablecoin adoption, USDC, Eurocoin across Europe. Had a very exciting times building this up, obviously being in contact with some of the biggest builders. And from there, I got in contact with the Börse Stuttgart, was kind of, to me, the next level into the institutional adoption. From the first day, my end goal, which is a bit different from, I guess, quite a few people in our space, was really to put Bitcoin in banking apps. Like I had this idea of, I think this will be the triggers of mass adoption, because between us, we know, like we use MetaMask, we use on-chain, we use all this is great. But this is 9, 10, 15% of the population. I believe 35, 40% of the population.
You are most generous already.
Yes, actually, that's true. But I'm still hopeful with the fact that some of us are still interested in that. But let's be honest and frank with ourselves. The mass adoption that most of us are targeting, which will be 70, 80% of the population using digital asset or investing in some, like 2 to 5% of their wealth in digital asset in general. These guys, they will want to rely on banking, more traditional, I would say, easy to manage investments. And this, I also got that feeling fairly early on. And that's why, firstly, from Saibabo, that's what I was looking at, providing a secure wallet to everyone. Because at the time, wallet, NPCs, all these people were not sure already. So pushing on the wallet side, providing the secured wallet infrastructure, because that's the first piece you need to get exposure to digital asset. Then I had the chance to go in the stablecoin, which I believe is a great second piece of blocks. So you have your wallet, then you use digital asset. And now I'm with the Börse Stuttgart, which is absolutely great, because now I'm literally at the bank level, helping all the major banks in Europe to build secure and compliant infrastructure.
That's wonderful. So I have two questions, a trivial one, of course, and a deeper one. Trivial one, I see that you're based in Portugal these days.
Yes, sir. Yes, absolutely.
But for Stuttgart Börse, so what are the working languages in such a crypto ecosystem? Is it Portuguese, German, English, or the three of them?
Yeah, it's actually mostly English, and I think this is a great testimonial about the willingness of this very traditional group that is Börse Stuttgart, 160 years old exchange, to get into the digital space as it should be done. Which is, if you want to get in this space right now, you cannot be just focused on one country and sourcing your talent from one country and kind of trying to get out from that. No, they were very agile. They said, look, we need the best talents. We need to be at the European level, if not the global level. And just for our institutional team looking at the digital asset, they built this very task force, I would say, of people who are based, me in Porto, my colleagues are in Spain, Slovenia, Switzerland, and it shows that they've been very agile and progressive on that. So that's kind of how we came together, and all working remotely for both of Stuttgart.
All right, so that was the main question, and the deeper one. You said in your introduction that you immediately saw the gaps that the blockchain-based technologies, such as cryptocurrencies and Web3 in general, would fill in traditional finance. Would you elaborate on that?
Yeah, sure. Settlement time is the first obvious one, right? When I was in TradeFi and I starting to get exposure, and I saw those settlement time T+1, T+2. Sometimes in smaller markets, it's actually T+30. Or I was like, come on, guys, we are the internet age. Like,
what is the time unit?
T+2, and depending on some markets, you're going to have different settlement times.
No, but when you say T, is it +2 years, +2 hours?
+2 days. Sorry, it's T+1, T+2 in terms of days. But in my mind, I was blown away by the fact that you could send emails and information within seconds, but you couldn't confirm trades and exchanges within seconds as well. And I was like, well, why do you guys need all this time? And obviously there is all the intermediaries you have to have in traditional finance. But when you look at the public ledger, DLT technology, all these things, you're like, guys, we could actually do it within seconds and really make the whole market more efficient. So that was kind of the first piece. The second piece was access to loan. And I saw DeFi being a great way to have more transparency about like lending and borrowing markets, direct access, potentially in a peer-to-peer ways. I mean, we've all been in this situation where we try to get a loan, and sometimes it gets, quite complicated in the conversation with banks, especially for small businesses. And I come from Bordeaux, southwest of France. We have like great countryside over there. We have very good local businesses that are looking to expand, but these businesses are having a real time to have loans from their banks for whatever reasons. But what I know as well is in those villages, you also have people with capital that they could love to get exposure to local businesses and things like that. So wouldn't there be some ways to put these guys in contact instead of having to go through very complicated space? I know we're not there yet, like this was kind of my vision at the time, but I think it showed, like to me, it was kind of obvious we could potentially use blockchain to bridge the gap and put like available capital with people who need capital to build their businesses. So those two things were kind of the starters. And then obviously we had the whole DeFi that expanded with the stablecoins, with the tokenization. I'm also a bit of a gamer. So with the NFT craze, which I wasn't too happy from a marketing NFT point of view and all the funky stuff we saw. However, like for example, what did Ubisoft, or what we've seen some very interesting initiative in the space, to me was very legitimate. Like, in the video game, why don't we use NFT technology and not the word NFT? I'm actually saying to a lot of people, please, let's get rid of NFT word. We don't care the technology behind it. What people want and the gamers want is to be able to use whatever assets they have collectible, that's the word I would use, to be able to go from one game to another or retain what you've bought in the past for the future. So you had a lot of different things like that that were quite obvious to me, to all the good things we were able to be.
It's interesting, regarding what you said about instant transmission, because I saw an interview a few years ago of a top manager of an exec of a big French bank who said that no, instant wires were not possible. So in terms of user experience, that was it, and that was before the big crypto boom. That was a few years before COVID, but that was funny to see that now, basically because of cryptocurrencies, most banks offer an instant wire service, just because they have to stay relevant.
Mm-hmm. Absolutely. I think, what brought digital assets to our society as a whole goes beyond just the technological side of things. For example, Bitcoin got a lot of people interested in monetary policies. Those people would have never looked how currencies are managed, like how a central bank manage the liquidity, etc. But then they got into Bitcoin, and then they started to wonder about what value is, like what gives value to an item. How is my money euro, which I think, hey, I saved 50,000 euros in my bank account in the last 10 years. Well, it's 50,000 euros. Well, it's not. It's not anymore. And so I think this is what what our space brought to this world. And on the traditional side, as you said, with all these innovative solutions, it brought also the fact, it pushed, I would say, the banks to be more innovative that they may have been if this didn't come up as a new technology and potential alternative solutions.
And regarding NFTs, it's interesting because yes, indeed, many people are ditching the term because it's got a bad reputation because of the bubble. But we at Web3 Enabler and in the Moon family, we use that for many things, such as licensing rights, and we use that to notarize many things. So that's cool. The cool aspect of the technology is here to stay. And
absolutely.
How do you guys envision that? Is there another term now that you guys would use for the layman to avoid the bad reputation of NFTs?
But I think it's interesting you mentioned royalties, music royalties. I was a bit involved with some music royalties also project last year. Tried to have them up and better understand and make the link between digital asset and royalties. I think it depends on the space, really. I think, for example, in gaming, I would call it collectibles, and that's it. And basically, it would be based on what you mention and how you market it. You know, like you say collectible can be more or less whatever. But if you say, let's say, if we take whatever specific game, you say collectible of this gaming universe, and then you can, you know, within the value proposition, what you're saying here is that the collectible you're going to have in one of iteration of this game, you can be brought to another iteration of the same gaming universe, I would say. So it really depends on the place you're going to be set up your business and where you're going to use NFTs. But at the end of the day, you know, we don't mention the protocols we use for the internet. We don't care whatever technology is behind of most of the tools we use. So really more, I would say, marketing type of conversation that each company should ask themselves and think about how can we best market that and exploit this technology.
And so how do you envision the future of businesses? What's the standard, you know, relationship with crypto payments and stable coins that modern day businesses will have? I assume it's going to be more like a back end usage, like the customer doesn't really care if it's paid in B2 in a stable coin or not, but in the B2B world, I assume this is going to be important. But maybe I'm wrong about it. What do you think?
I would say it's still a question somehow up in the air. I've been asked a few times, like, can I list a stablecoin, use a stablecoin, and just say USDC and Euro in the front end, and in the back end it's a stablecoin. In principle, I think it's a possible idea and it can be done. However, I think both of us can see there's some legal issues and some disclaimers issue here, because there's obviously a bit more risk associated with a stablecoin than with a normal coin related to the company issuing the stablecoin. Looking at, you know, the way the reserve behind the stablecoin, the way it's segregated from the company, etc. So now, when you look at Circle, for example, they've been doing it very seriously. There's a lot of communication around the reserve on a weekly basis, monthly basis. Everything is well segregated, etc. Nonetheless, I still think there is something to be disclaimed here, and so I think on the legal side of things, we should definitely look into how can we avoid adding unnecessary burdens. However, how can we also make sure we are transparent with what we do? Looking at businesses, I think one angle that is interesting with digital assets is, I would say, the G20 countries, like or Europe and US, for example, when they look at digital asset, they don't look at it the same way you would look at anywhere else, more or less, in the world. You know, us, we have like SEPA, instant SEPA, there is SWIFT, like we have some sort of already existing mechanism that works best. However, when you look at European countries, companies, for example, you have a lot of them that source material or sell overseas outside of the European region. And we know how those payment systems are super complicated. And when you want to pay your supplier who is in Latin America, it's going to take you 2 weeks. 2 weeks of stress because you don't know if the money is there or if the money is coming. While these gaps are very easily to fill in. And I think that's where we need to get out a bit of our European a European type of view or American type of view, and really look at, okay, how is this going to help us to have better interaction with the rest of the world? How is this going to improve our operations with all the branches that are across the world? Because you also have those companies who are located in Europe, France, wherever, and who have those branches on the other side. And hey, they need 30 millions in treasury. Well, you know what? We could have like this and that over there in literally a matter of a minute nowadays. So all of this is very interesting from a corporate, I would say, management. And then obviously, as you said, there's the whole payment side of things, which is very interesting. The last quick thing on the stablecoin, there's also the last very, very important item, which is the geopolitical aspect of it, right? And this is where things actually get a bit funny and interesting, in my opinion, because then that's where you mix technology, politics, economic, etc. And I think for us, for example, as a European, I see Europe stablecoin a great way to expand euro within the EEA, because in Europe you have a lot of countries who don't use euro. Well, why don't we expose those countries who would like to get in the Eurozone to euro already little by little via euro stablecoin, and kind of have trials with that and see maybe to ease later on the proper integration to the Eurozone, because we've seen in the past that those transitions are not easy, especially for local people who sometimes suffer from this transition to euro with a big loss in purchasing power. So why couldn't we leverage those stablecoins to make this transition more easy?
Okay, and so I see you put the emphasis on speed at the beginning of this topic, and then you switch to geopolitical aspects. What do you think is the biggest, the most impacting factors for all these honest businesses in non-G20 economies? Like, I've seen many entrepreneurs from Nigeria, South Africa, Mexico, Costa Rica as well, Brazil, like many zones where it's very important to conduct business, and you're technically not allowed to use dollar or euro. In the case of the Brazilian real, for example, it's not a big deal, but in many African countries, they have to face a bureaucratic nightmare and a banking nightmare because their money, their currency is not performing that well. And what do you think is the most impacting factor? Is it speed, or is it overcoming, finding a work around the limitation of a less powerful currency that is hindering your business? Which one is the dominant factor in your opinion for these countries?
I mean, the thing is, everybody is a patriot to one level or another, I would say, and everywhere you look at. And so I think it's finding the right balance. As a business, you want to be efficient, you want to grow, you want to be exposed to the growth of the world, especially when you are in those countries that are, as you mentioned, Africa, South Africa, but where there is actually a boom going on. Like I was reading this article about this young entrepreneur, 29 years old, who was trying to, I can't remember where he was from in Africa, but basically was trying to revolutionize the whole telecom industry. And he's about to find a great solution for it to have like non-SIM phone mobile. You have those things coming up from these countries now, and innovation is not something that is only coming from the US or Europe anymore. And so we need to give tools to those people, very bright minds and entrepreneurial minds. We need to give them means to really go out there and conquer new business and to really push innovation on a global level. So that's one. But on the other hand, and even me talking from a French European side of things, we all know the colonial time back in the days, and most of those countries are still kind of marked by what happened in the past. So now if you're trying to get there as a European and say, hey, you should use euro because your currency is not worth anything, well, to me it's kind of a reminder of a not so light past, I would say, with the relationship we have with those countries. So I think what we need to have is a clear communication line saying, hey guys, your businesses, they need access to those European markets, they need access to this global growth. European stablecoin, for example, can help you with that, or USD stablecoin can help you with that. However, the goal here is not to replace your local currency with ours. So let's be smart about that. Let's make it, let's help you kind of, I would say, not better manage your own currency, but let's find ways to make your local currency maybe more relevant to your own entrepreneurs and companies, while also better integrating it with the rest of the currencies across the globe. I mean, to me, the future is cross-chain, is on-chain FX cross-chain. You know, we should be able within the next few years to really go from one currency on one chain to another currency on one chain without seeing anything on the front end very quickly at a very cheap price. That is the future, and I think that would bring a lot of additional growth to the global economy.
All right, and so how do you think states are going to react? Because we've seen a few coins that are not only stable but very much altered. Like the principle of cryptocurrencies in the first place of the blockchain industry was to have networks of validators, any kind of proof, like proof of authority, proof of work, proof of stake, proof of history, whatever the proof is. But there's a consensus mechanism. Every new generation of cryptocurrency is trying to reduce the carbon footprint and the hassle of finding a proper consensus without sacrificing the immutability of the network. When you see CBDCs now, so state-issued cryptocurrencies, most of them basically betray these principles. They are more centralized. They are not tamper-proof at all, and stable coins by themselves are pegged to currencies that are totally not tamper-proof. How do you think this is going to impact the world? Is it going to be like, okay, we have the said differently from the perspective of an expert, what is the point of having the blockchain tech that is an immutable technology when something is under the control of states, financial institutions, or sometimes maybe we could talk about big companies who could also impact the market in some places when they control the vast majority of the supply of one token, for example. Do you think there's still room for decentralization, or do you think that that the relinquishing their power from the perspective of these big hitters, mostly states but not only, is out of the question? What's your perspective?
Well, I think specifically looking at the stablecoin area for decentralization, I think it's a very complex one. Because obviously you're talking about a centralized issuer, which is the central bank, and you back your stablecoin on this central bank issued stablecoin. So obviously it's called stable, but it's as stable as the currency it's pegged to. So me firstly, looking from a technology innovation point of view, I think again it's a matter of balance. I'm not totally against the CBDC because just like my vision that I have around putting Bitcoin in a traditional banking app, I think we have to accept the fact that there is a part of the population and people who will need or who wants to still have this sort of oversight from bigger agencies because they still think about like 2008 crisis and all those crises we've seen in the past. And we know at the end of the day, if things really get wrong, those actors can step in and really help to put things back together.
And solve the problem they created.
Somehow, yes. But still, like for the end users, like looking at the day-to-day life, they just want their issues to be resolved as quickly as possible, and having the centralized actor behind it obviously make it a bit more easy, I would say. However, on the innovation side of things, and I think that's where the balance has to be struck, is we should still let a private actor really I would say have fun with the tech and pushing the boundaries of what is possible or not. And that's where I think the future would be, in my opinion, or should be, in my opinion, something in a balance between having a CBDC network that is interoperable with a set of private stablecoins that have their own value proposition. Because within the stablecoin itself, you can build a lot of different things. And you don't know, as you said, there's new mechanism proof of concept, or I would say a consensus mechanism, that can keep coming and coming every year, every 2 years, this and that. So what happens if the CBDC is built on this mechanism and 3 years later you have one that is so much more better, etc.? So how would the central bank be able to recognize that it's so much better if you don't have something that is working on it? That's why we should really be open to have those two, knowing again that those stablecoin issuers, they should definitely be regulated. there should be some oversight, and there should be some sort of set of well-established stablecoin that people can trust and trust the issuer of.
All right. And speaking of which, how would you assess the maturity of regulations these days? Because I know there are many businesses who are saying, okay, we are basically transacting with other countries. So usually businesses who are performing their business within the Eurozone or the dollar zone, or in many places in Asia where the economy is already very mature, most of these companies do not ask themselves whether they should use stablecoins or not, because they don't have a use case, because they have an excellent financial product usable on a day-to-day basis. But when they conduct business, country-to-country business, that's already a hassle. And even from the US to the Eurozone, for example, we at Web3 Enabler are a company based in the US, and some of our employees are based in Germany and in France and other places. We can see how complicated it is just to have a standard bank wire. So that's the use case. But do you think that now it's relatively safe for a business to use stable coins, either to pay employees or to pay for supplies and pay for services? Is the regulation mature enough? Basically, are you or are you not able to comfort my listeners who are considering it?
I think yes. I think yes. I mean, because firstly, the biggest stablecoin issuer, or would say the most trustworthy one, are now quite well regulated and identified in Europe and in the US. So if you use Circle stablecoin or Société Générale stablecoins, or I would say there's a list of 3 to 4 kind of well-established, well-trusted one. Well, there's absolutely no issue with using them for salary payment, international transfer, etc. Looking at the stablecoin itself. Now, obviously, there is some sort of, I would say, learning curve with using them. And actually, that's what I was doing already back at Cyberbo. I had some contact with companies looking at, hey, we have these suppliers in Latin America, and we're looking into how we could improve our way to pay those suppliers. Well, obviously, as I was mentioning, the first thing you need to look at is wallets. And especially back in the days, again, wallets were a bit like something weird for most of the actors. But once you kind of go through the basics of how to set up a secure wallet, and again, looking at wallet now, we have very well-established wallet provider. For example, for Stuttgart, we provide a wallet infrastructure to large banks and can do that for corporations and others. But obviously, we're not the only one. And thanks, we are not the one, because that shows that the industry is growing, and sometimes having competitors is actually good things because it validates what you're doing, I would say. And so once you kind of understand what are the additional things you have to handle once you handle stablecoin, it's actually very much worth it in terms of times you're going to save, money you're going to save on those transfers. And it's just a matter of like agreeing on some sort of standards, looking at the cybersecurity aspect of things. But again, looking at the assets itself, it's totally safe using those well-established and regulated stablecoins.
So then the question that comes is, how do you envision the future of regulations for this type of activity, and what will be the benefits in the future for businesses, or what will be the cons for business not to accept that? Like, are they going to be left aside and basically miss the train because they don't want to switch to stable coins or accept them in their businesses? Is there going to be a disadvantage in terms of commercial capability? And are there regulations that you envision in the future to even further the adoption of stable coins?
Well, I think so. Firstly, on the companies that could left over, and then I will go quickly into the future of regulations. But for the company left over, are these companies going to go bust because they're not using stablecoin? Maybe not. However, I would make the parallel with AI. And the AI, like does a company not using AI right now would go out of business? No. However, if you integrate it smartly in your processes, you're going to make savings little by little, improvement in your processes little by little. Sometimes it's going to be incremental, sometimes it's going to be disruptive. But when you put them together, this is how you're going to get really to, I would say, world-class company that is very efficient and optimized. So depending on the level of optimization you want to put into your processes and company, well, I would say stablecoin is definitely one of them that can help you to further optimize those processes and make sure you save every single dollar you can or euro you can on your operations.
Allow me to ask to elaborate.
Yeah.
To ask you to elaborate about that, because the parallel with AI is fascinating. Because for me, most companies I consult with in the field of AI are companies that that are well aware that they're not going to collapse immediately, but eventually, because of the profit margins that are going to be reduced, because you can do many things for a price that is so much cheaper. You will not be replaced because you refuse to have AI. You will not become obsolete because you rejected AI, but because the others did not. So the others will do the same thing as what you can do, but in less time and for a smaller budget. Do you think that it's the same order of magnitude for stablecoins? Is it that big? Because you said sometimes it'll be disruptive. I have a hard time imagining how much disruptive it can be. I'd love to have your insights about that.
Well, if you think, as I was mentioning earlier, with a world where FX is done on-chain nearly instantly from one chain to another, from one currency to another, I think that's pretty much disruptive. It's disruptive for any company involved in already FX business, of course, but also from any company that is involved in those international payment from going from Europe to the US to Latin America, etc. There is some disruption there. There's going to be some disruption around like what tech you need to integrate in your company to be able to use those technology, but more importantly, obviously, what it's going to allow you to do. For example, I'm thinking airlines. Right now we're still on the miles point type of things with Air France, whatever airlines out there. Well, why don't we use stablecoin? Like miles doesn't represent much nowadays. It's not that efficient. It's not that traceable. It's quite obscure systems, in my opinion. That is disruptive to some level. HR function, as you said, employee payments, this is disruptive because then payments, salary payments can be obviously an issue in some cases. And especially again, for Stuttgart, we have distributed teams. Obviously we're still a big company, so we have the resources to handle that. But as a medium-sized business looking to hire the best talent in the globe, maybe that would help them with these things.
Yeah, and even with the big companies, like redeploying the manpower instead of allocating these guys to something that could be automated could help. Okay.
And treasury management as well, as I was mentioning earlier. Treasury management is obviously super important when you want to deploy capital in a new market, and be very quick about it, and kind of feeding these new areas with cash as they need.
Well, that's great. Would you care to finish this interview with your insights regarding regulations?
Yeah, absolutely. Yeah, and definitely that was the second point we were quite mentioning earlier. Well, I think this actually, how to say, in my vision or my ideal vision where I'd like things to go, I think stablecoins and broadly digital assets, but really stablecoins can be a topic that brings the world together, literally. And this should come firstly from Europe and the US. And I think that is something Circle is doing pretty well in communicating, because what they'd like to do, as I understand, is they'd love to have some sort of more harmonized regulation between Europe and US. So we know competition will still be there between whatever region and countries. However, if we could get to a point where you have some sort of bare bones harmonized regulation that allows those different regions to better work together and align on what should be or shouldn't be done, what is compliant or is not compliant, that would be absolutely powerful. That would be the global economy, I think, on steroids for the next few years, because then with the capital being able to flow from one place to another at the speed of internet in a regulated, compliant environment, I mean, this is going to open a lot of things. And then we could imagine a point where hopefully, we have some sort of harmonization between US and Europe around those regulations, and this could trickle down to other regions, because obviously those two regions would have a lot of leverage to be able to say, hey guys, now we have this system that is more or less harmonized with little caveats there and there. A bit like what we have with MiCA actually right now. Like MiCA in Europe, we have MiCA at the European level, but every single regulators have their own interpretation of some aspects of MiCA. So you could imagine something similar, I would say, between US and Europe, where hey, you have some bare bones and then you have little caveats there and there. But still, you have the structure, you have the common understanding of saying, hey, we have to go in this together, because right now we are in a global economy, and making capital movement more efficient will lead to it's a win-win situation for everyone.
Thank you so much. That's fascinating, and this is really exciting for the future of finance. And I hope this wasn't lining for you, dear listeners. Thank you so much, Benoît. This was Benoît Boudier. Look him up on LinkedIn and look at what they do at Stuttgart Börse and other companies he mentioned. Thank you so much, Benoît.
Thank you very much, Gauthier. Thank you.